Hey, welcome back. We're here again with one of our favorite shows, This Week with Wendy. The only show where you'll find real talk about the real SoCal estate of mind with your host, Wendy Ross, who after decades of working at real estate brokerages in Silicon Valley and Orange County, decided it was time to create something different, and so she did. That's when Veracity Real Estate was born, because the time was right for renewed commitment to bespoke client advocacy at all levels. Yes, we said all levels, something you don't see in high-cost markets like Southern California. And through it all, you're going to hear it today, she's built a company of data-driven decision makers. Or did they say data sexy? I'm not sure if I can believe that or not, but we'll find out today here. With the data nerd herself, the data diva. That's what we're going to call you here, the data diva here. Wendy Ross, welcome.
I'm liking that, Paul.
The data diva. How's that one? I just made that up.
That's good. That's great. Yeah, and what do you mean you question whether or not nerds are sexy? A, we rule the world. You're welcome for the technology that we're using right now.
Yeah, thank you. So, exactly.
Totally. Yeah, without us, where would we be?
Well, if anybody can make data sound sexy, you can. I mean, it's suddenly, what were you saying? It's like, you had a couple other clever ones before we started here, something about if you save money, that's sexy or something here.
Cash flow is sexy.
Cash flow is sexy. There you go.
Yes, in real estate, cash flow is sexy. Yeah, well,
you got a sexy topic today here. This one's going to sizzle.
Well, tax saving strategies for real estate investors.
Oh, I'm getting hot just thinking about it.
I knew it. I was going to be getting hot already. I know. I can see from here. Just you wait, Paul.
Okay.
You tease me, but you love me because I have a whole different perspective. I look at the market differently, and I bring you market analysis that comes from a totally different perspective.
You sure do.
And part of how I do that is by surrounding myself with brilliant people like Thanh Cambaliza. We have to have all of the experts as part of our arsenal. And Thanh, of course, is one of the most critical pieces to the real estate equation. I mean, of course, I will help you go find or dispense of property, but how you hold it and how you manage it and how you document your cash flow, that's all Thanh. So we need to hear from the expert about what that's going to look like. She's a CPA and she's partner at Cambaliza McGee LLP. And I'm in awe of Thanh. She was born in Vietnam. She came here at the tender age of 20. I mean, that's still a child, really. So coming to a new country and learning about the culture, learning about life and the business of business, bravo. I
thank you.
I don't know that I could have done that myself. And since 2006, she's been in the practice of public accounting. And thankfully, it's the perfect career choice for her because she loves it. And her clients, I know, love her. So here we are. Thanh works both in public and private companies. So whomever you are, she's probably got a solution for you. So she'll work with small business owners and also executives in major corporations. And the diversity of her work stimulates her whole entrepreneurial and creative mind. It keeps her on her toes. She likes to provide complex business and tax strategies to help everyone become more profitable. So even if this is your family business and you have one investment property, or even if it is just the managing of the home that you're living in, you need to talk to Thanh about all of your tax strategies and how they fit together, because no two situations are the same. No two families are the same, right? No two businesses are the same. And in that light, people pay attention. We're going to talk in broad strokes today. Thanh is not giving you specific advice about what you should do in your situation, but she's going to just have a conversation with me about things that we can do that you might want to employ, so you can call her later and make your own strategy. So anyway, when she's not doing all tax all the time, she loves to spend time with her family and travel, and she gives back to the community in a variety of ways, one of which I know very well because we were at this wonderful gala that she threw. You were the chairwoman, right?
Yes.
Tell us a little bit about that really quick.
Well, it was really fun, and I just figured if with a small nonprofit organization, someone had to step up, and I decided to step up to help them to raise funds for the year, hopefully.
I love it. And this is the Art and Creativity for Healing Foundation? Organization.
Yes.
Yeah, it was a fun party, people. It was called Hats Off, and we all wore fun hats. It was like the Mad Hatter's best tea party ever.
And can we get her a little closer to the microphone here? She's pulling away from it here. I don't know. She's resisting getting up close to that microphone here.
You can pull it closer if that's easier. There you go.
There you go. Right there.
Thank you. All right. So thank you for being here.
You're welcome. Thank you for having me.
I just love having you in my world. So I've got a million questions for you, of course, but just if you would indulge me for a moment. First, I'm going to do the whole This Week with Wendy thing and frame the market from last week. So as Paul knows, and he snores every time, things are just ploddingly, boringly kind of the same. We had 500 new listings come on the market last week over the week before. That was up 2%. We put 508 of them into escrow. That was down 5%, but that's because the week before there was just nothing to sell. We ended up closing 545 sales in escrow. That was up 2.6%. So just these minuscule little weekly increments. And people were trending into late spring, early summer now. We should be getting increases in inventory of 20, 30, and 40% increase week over week. We're not. This is not going to get us anywhere near price stabilization. This is going to be a long, hot, ridiculous summer unless something catastrophic happens, and I'm not expecting a meteor strike because we do track these things too. So no, I mean, prices are going to continue to do what they're doing. Median price has been bobbling up and down through spring. It's at $1,050,000 as of this last week. That was down 2.8%, but that doesn't mean a lot. Week over week, it's going to bobble a tiny bit. We're over $1 million, people. The median price in Orange County is more than $1 million. That's insane. And as I reported in my last month-end report, and if you're not getting those, go to my website or sign up for them at realveracity.com. In my last end-of-month report, I cited the correction that occurred after the 2009-2010 meltdown. And 11, 12, 13, all the speculators were in the market. Prices really stabilized and started to increase when the days on market hit this all-time historic low of 36 days. Wow. We are at 7 days now.
Wow.
I mean, the historic low has just been blown into the weeds. We're selling houses in 7 days, for the love of God, people. We need more inventory. If you're hesitant about putting your home on the market, remember what we've been saying. If you're over 55, you can take that property tax base with you. Just put your dang house on the market. Someone else wants to buy that house that that's too big for you or too small for you or. Anyway, I'm going to get off my soapbox. The list price to close price ratio is still high. We're selling them 6% above list price. And trust me, sellers are not dropping their prices yet. So it's an incredibly hot market. We need more inventory. Anybody who's coming in and buying anything in this market needs to make every single dollar count. And that brings me back to Thanh. So, Thanh, there's so much here. So I'm a new would-be investor. I want to invest in real estate. What should I do, and what sort of entity, if any, should I create?
Yeah, that's probably most frequently asked question when clients come to me. Maybe they have one property, or now they're just going to buy their first property. Mm-hmm. Usually, I always tell them I'm not an attorney. They need to talk to their attorney about liability protection of various type of entity.
That's smart.
But from the tax side, number one type of entity should be held. The real estate should be held as LLC. Mm-hmm. And then sometimes I see people use it under partnership, which is a GP or LP for various estate planning purposes. But again, you have to talk to a state attorney for that. Mm-hmm. But most frequently used, and I recommend, is LLCs. Mm-hmm. If I can say almost never and ever hold a real estate under corporation or S corporation.
Why would that be?
Well, because S corporation, we don't need to get too nerdy in it, but there's a built-in gain in it. So once you put that assets in, it's very hard to take it out.
Oh.
And it's going to be tax consequences when you take it out.
Okay.
Of that type of entity.
So to minimize your taxes, try to avoid the S corp if you possibly can.
And never ever put in C corp either. So they still corporation, just LLCs or partnership.
Interesting.
Yes.
And it still offers some protection.
Oh, yes.
Because of the limited liability. And
yes.
Never forget, LLP means limited liability.
Yes.
So,
but LLC is going to be more protection than LLP. And again, I'm not an attorney, but from the tax law, that's what it is.
I love it. And what's interesting, too, is I hear that, and I see this a lot when I'm looking at title records and researching property for clients, that oftentimes there will be an LLC specific to each property. Is that what you would do?
Yes. So let's say if husband and wife make combined $200,000-$300,000, and then they save some money to buy real estate, right? So then if you don't put under any entity, let's say something happens, a tenant fault, they sue you, they go all the way to at most whatever you have.
Right.
The LLC basically try to shield it away from whatever you have. And
so they can't take everything you own.
Right. So then some very sophisticated real estate investors, they say, well, I only want anyone to sue, get me at most that property only. I don't want them to get to my other 10 properties I have.
Got it.
So that's why they recommend, or attorneys usually recommend, to create separate LLCs. Now, it can be very costly because each LLCs in California minimum is $800, regardless whether you make money or not.
Okay.
So usually I would tell the clients, like, these are pros and cons from tax perspective. You have to make decision. I had a client that just came to me with 84 properties, and the attorney said, well, 84 LLC. I was like, oh, wait a minute. No. It's probably maybe worth 200-300. Their cup of tea, their risk level is about 3-4 million of liability if they can be sued and all that. So then we narrowed down to only 15 LLCs instead.
But that still makes so much sense to me, because if you're minimizing your risk exposure, $800 seems money well spent, rather than
Right.
if you've got millions of dollars in assets.
Right,
So,
for
wow.
sure. But then don't forget that you have to pay me for every return as well. So I always make sure people understand the pros and cons.
Interesting
Yeah.
point. See, I love the honesty, because she doesn't work for free.
No.
And she doesn't have to, people. When someone knows what they're doing and they're going to save you money, pay them. Just sign at the X that is, no, sign on the line that is dotted, right? Is that Glengarry Glen Ross? I'm showing my age. All right. So how can real estate investments save families and individuals money in taxes? I mean, we see what happens with large corporations, but how does the everyday person save money?
Yeah, so like how I said earlier, everyday person, like husband and wife, let's say the husband worked for a corporate or banks or whatever, make, let's say, $400,000 a year. The wife stayed home, take care of kids,
Right.
and they both love investing in real estate. So one of the rules is called real estate material participation. In other words, if you spend more than 750 hours a year in real estate, you consider as real estate professionals.
So
a
you're
person.
participating. Oh, interesting.
So then usually husband and wife can look out there, look for properties, talk to bankers, talk to real estate advisor and all that. Those hours count toward that. And now you become the real estate person. So the wife now going to be the real estate person because the husband already works for someone else.
Right.
They don't have another 750 to prove to the IRS I can carve it out. But that's how we can structure to say the income here and then the real estate income here going to have a loss on paper because
Right.
of depreciation. So that's how, let's say we have $400,000 here income, and then over here real estate with cost segregation study, which we probably going to touch later.
Absolutely, we are.
Going to have a little loss in here, let's say even up to 200. Now you're going to be taxed on 400 minus 200 equals $200,000 income only, instead of here I am, stay-at-home wife, not making any money, have the little passive real estate loss that you cannot deduct.
That is so stinking smart.
Yes, so that's probably one of the ways that you guys
See,
can be in real estate.
And people often don't think about it, but when I explain to my clients, real estate, in general, residential real estate is composed of two very important parts. One is the physical structure, and the other is the dirt upon which it sits. And of course, in California, especially Southern California, the closer you get to the beach, the more value there is in the dirt. The dirt's really, really valuable. So the dirt tends to go up in value over time, whereas the building or the structure that's on top of it, it's physical and it deteriorates over time. So you want to depreciate that. You want to say, yeah, I'm losing value in that. And that's what TON's going to help you do.
Yes.
And then my favorite part of this is cost segregation. So taking different aspects of the physical property and depreciating that differently. And can you kind of expand on what that looks like?
Yeah, so I usually explain to my clients that for residential rental property, let's say we buy that property for $2.7 million, because
I
I
love
want
you.
easy math. That usually without doing anything, the IRS say, hey, 60% of it, they may agree with you, but more likely I'll say 60% of it going to be able to be depreciated over 27 and a half years.
Okay.
So you just do the math, 2.7
Yeah.
times 60%, blah, blah. So you have very minimal
Right.
expense every year. But for 2022, is the last year, you can accelerate 100% of depreciation of anything that's not 27 and a half years or less than 27 and a half.
Really?
So cost segregation study comes in and say, hey, the window's only 7 years, the appliance is only 7 years, these are only 5 years, and so on and so forth. So out of all this, you may carve out about $200,000 to $300,000 of these assets that have class life less than 27 and a half years.
Exactly.
15 years or less, basically. So then you can have that one-time deduction, all of it at once. So remember that guy said 400K of income. Now he's only have 300K of losses.
Because he accelerated the depreciation
Yes.
on those things that have shorter lifespans.
Yes. So then now he only be taxed at 100. And this is true story. My client then going to save all the taxes and put in another property, roll it in, and then build his real estate portfolio that way by saving
Right.
taxes.
You know, and people, when we think about all of these like legacy families in America and around the world, the Gettys, the Vanderbilts, you know, these big names, they may have made their money in a variety of different industries, but they all had massive real estate portfolios because real estate truly is an important part of your investment strategy, right?
That's 100% right.
Yeah. So, I mean, that's why I own my own home. All right, so we've talked about how in a one-off situation for property that we've bought now, we've invested, we're holding on to it, and we're taking advantage of legal tax strategies, but for the smartest of the smart, to accelerate a depreciation and get more write-offs. So another different type of strategy is selling one investment property for another in a 1031 exchange. Can you talk a little bit about what that is?
Yes. So I actually can tie back to cost segregation study even.
Ah,
Because right now, once we accelerate that hundreds of thousands first year, let's say next year you're like, well, but I find something else I real like, and this one makes so much money on a sell. But whatever you already accelerate depreciation, technically you have the very low basis, your tax is now going to be higher. So you actually, instead of just sell straight up, you 1031 exchange the one that you did cost segregation, because now you even have larger gain than usual,
right.
and you roll into the new property.
So you want to shelter that gain.
Yes, basically forever until hopefully you pass, and then you pass it down the next generation. You have step up basis, and that's how you keep going.
And that's how families do it. So a lot of
Yeah.
these people that have so much wealth because they were transferring things, you know, it's because they had that little house on Lido that great 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 grandpa bought for
Yes.
$60,000. Now it's worth $6 million, right?
Yes,
It's
exactly.
nuts. It is just nuts. People keep talking about the challenges to the 1031 exchange. You know, like every couple years we hear about, oh, they're going to get rid of it. They're going to get rid of it. Have you heard anything about that?
I hear about it, but I think people just talk about it. I don't know whether it's actually going to happen.
They're just trying to scare us.
Not only the normal people, commoners own real estate, you know, there
Right.
are other people owning it. But with 1031 exchange, I want to bring out like one very frequently asked question to me as well is you cannot 1031 exchange your personal home. It's
Right.
only rental, only business rental real estate.
Right.
So you say, oh, I can live in this house and a 1031 exchange it. No, it doesn't work like that.
But at least they broadened the categories a lot. Several years ago, they said an investment is an investment. So you can 1031 exchange. Let's say you had a single family house that you were using as a rental. You can 1031 exchange that and buy a duplex
Correct.
or a hotel even, or, you know,
Correct.
another investment. So,
Correct.
you know, we can't cry. We can't do other primary residence, but there are other alternatives for our primary residences that we'll talk about on another show.
Yes.
All right. So, what about these people? And I find it very funny because I do get this question occasionally. I just want to invest in land. I'm like, you've seen Orange County, right? There's like 2 parcels left, but whatever. What do you say to people when they want to invest in land?
So usually, when people invest in land, I say, well, first of all, what are you gonna do with the land?
Right.
And they say, oh, I want to build this, build that. I was like, do you have a team underneath to even do all that? I was like,
Thank
oh no,
you.
because usually doctors and engineers, they just wake up one day they want to do that. And I say, well, that's my first question. My second question is like, you have to talk to your financial advisor whether that's even good investment for you. But from tax perspective, if anyone looks to invest in real estate to save taxes, land is not the answer, nor the development of the land. Basically, it has to be ready to go.
It just sounds sexier than it really is, people. Ton is so right. I mean, if you don't have a team of people and the economy of scale, even, it's so expensive to hire
Exactly.
labor and get materials for one project.
Yes.
You know, and you're competing with the big kids out there. So,
Yes.
yeah, it's here's a weird analogy, but bear with me. It reminds me of when I was recovering from a surgery years ago. So I decided I was going to learn how to make French pastry, and I bought all of the equipment that I needed, and I stayed at home and I taught myself how to make French pastry, and I was really good at it. And when I was done and I did the cost analysis, one croissant cost me like $5, and I'm like, this is not time or money well spent. I am not going to do this anymore. Same
Exactly.
thing, right?
Exactly.
Like I'm all about, you know, going out there and wanting to make the world a better place, but that might not be the investment for someone who doesn't have lots and lots and lots of land that you can acquire. Okay. So we talked about cost segregation. We talked about saving taxes. And what we haven't talked about, and we talked about, how you can save them money, but when is it that someone should know it's time for me to get a CPA involved? At what point should that be happening?
Yes, usually when people first get their first property, they usually think their tax situation become more complicated.
Mm-hmm.
I think if they need to talk to CPA at that time, probably come back to that question, what type of entity, if I should even create one entity
Okay.
to hold that property. Beyond that, one property, as long as you keep rental income and expenses neatly, you still don't need a CPA. But when you get more than 2 or 3, and then you have sales, built-in gain, you want to sell those properties, what do you need to do? Or in that examples of how you have rich husband or rich wife work, and then what do we do with the real estate to offset that income?
Right.
So need a little more strategic planning, strategic advisor, then yes. But if you just need someone just to punch that in the software, you can do the same, or any other tax preparer can do the same.
Got it. Got it. So I love it. You're saying you don't need me yet.
No, you don't. You just need to keep a very good track of record.
Mm-hmm.
And since we talk about that, I really want to bring to everyone's attention that not everyone touch your tax return is a CPA. CPA is a very hard test that we would have to study. We would have to learn a lot. And the IRS does not require you to even have any sort of degree to prepare taxes.
Right.
So don't just call anyone randomly
Right,
CPA,
right.
because it's not true.
Right. Because there's the enrolled agents, they're not.
No,
Credential
enrolled agent
necessarily,
is
yeah.
not. Yeah, but even EA, they have to take a test. Versus tax preparer, you just need a little test with IRS annually to renew your ability to prepare taxes.
Wow.
So it can be high school, non-high school, no degree. In fact, I've seen someone hire a homeless person to prepare someone else's taxes just because they can punch
Holy
in numbers.
Mother of God.
So be careful and don't just use the word CPA too casually because it hurts our feelings.
No kidding, right? Well, like me in real estate, I'm a broker, and it means I'm held to a higher standard. But people just sort of use that word interchangeably, and they don't understand really what it means. But a
Right.
certified public accountant means that you are answerable to pretty much God, right? All right, the IRS, which
Yes.
is nearly God, right? They're God-like. All right. Oh my goodness. So, since you said that, we've made this clarification about be careful with who you hire to do your tax preparation and things. So what if somebody wants to work with you and your firm? You've agreed, okay, yeah, you're at the level, you've got 2 or 3 properties. It's probably getting a little bit complex. We might be able to bring enough value to you that it's going to offset our expense. What does it look like when they work with Cambaliza McGee? What's that experience like?
Yeah, so for people that work with smaller firms or just a tax preparer, at first they come in like, I just want to work with Thanh. But actually, you don't want to pay me a lot of money just to put in your 1 + 1 = 2. So the data entry day-to-day is going to be prepped by the staff, that all accountants, we all graduate from university with accounting degree.
Great.
With my supervision. And then I'm more involved on the planning, strategic, all the stuff that no one knows yet.
Right.
That's when I do it.
And that makes sense.
And that saves the cost on the clients as well. Sometimes they just want that, feel that important that, oh, you have to be the owner, have to be the partner, but you need to get your money well spent. You shouldn't spend on me to just type your name.
Well, and your team is tight. When you've worked with the client and you've crafted their strategy,
Yes.
your team understands, okay, here's the direction we're taking.
Exactly.
John and Jane Doe are doing this. This is their entity. This is how we're depreciating it. Go plug in the numbers.
Exactly.
Right.
Exactly.
Yeah, paying you to do the data entry doesn't seem like money well spent or time well spent. Your brain needs to be doing other creative things, advising other clients.
Yes, exactly.
I love it. Okay, so talk to me about who is a great client for you? Do you have a favorite type of client? Is there a type of real estate, a geography, a personality? Is there?
I would say more like the personality, willing to learn and be strategic. If you come in, so one person say, well, I want the most aggressive, badass CPA. I said, I'm badass, but I'm not sure what your definition though.
What does that even mean? I don't know.
It has to be strategic, willing to learn and willing to plan in advance. If someone comes to me after the transaction is closed, it's kind of too late to do anything.
Yes.
And if you just come in to want to save taxes illegally, I'm not the answer either.
See?
But someone just like, hey, I have this situation. What can you do to help me? I think that's probably a good fit.
Nice.
me.
So
Yeah.
get me out of the gate, moving in the right direction.
Yes,
Legally.
legally.
Honestly. See, there's a reason my company's called Veracity, because I surround myself with people like Thanh. So, and speaking of people I surround myself with, Paul, you ready to take it away and talk a little bit about today's sponsor?
I am. I just have to cool down. You guys have gotten me too hot. All right. Well, as always, you proved yourself that you surround yourself with some great strategic partners, including our sponsor today, Ford and DiIulio. Ford and DiIulio is an Orange County-based boutique litigation firm with experienced attorneys from the big law firms. So you get all that experience in a boutique firm like theirs. The partners who did so on the concept of what they call aligned interest, where their success is tied to your success, and it's not just tied to how long they can string things out. It's being efficient and effective, and where they engage in the relentless pursuit of their clients' goals, whether in litigation, mediation, or even a trial. If that's what you're looking for, you can find them at FordDiulio.com, just like it sounds, FordDiulio, FordDiulio.com. All right. So many. I just one? Do I get to ask one question, or have we gone for another hour here?
No. Ask a couple questions. I knew you'd have some.
I never thought of creating an entity to for investment purposes. I just thought, well, it's all just going to be income that passes to me. But I guess I'm not thinking of all the downsides of getting sued and stuff here. Are there other reasons? Are there tax advantages other than protecting your interests here? You get taxed differently if it's in an entity?
So it depends, but if we just stay with real estate for this show, the tax almost the same, but there is another advantage that I like to mention to clients. So every time you don't have an entity, all your activity of income and expenses on your personal return is almost like you show the IRS everything. So if the IRS audits you because you claim one thing, but they get to see, oh, you have this W-2, you have another investment too, you have this or that. Versus if you can hold this in a separate LLC, all the IRS can see when they audit your individual return is one number or two or three from the K1s, which is a summarize of everything. Now, if they want to see what in there, they have to audit another entity, and they have to open another case. So it makes it a little bit harder for the IRS to like, hey, what do you have? What do I want to look at?
So they start a fishing expedition, and all of a sudden they start finding all these other things, and it opens a can of worms, maybe.
But usually they don't.
They just
only
get a stack of K1s.
Yes, exactly. And then they really don't want to, oh, I audit you, and then therefore I audit your business. It's very rare unless they see something very fishy. So it's
And that wouldn't be your client anyway.
no. So we make it a little bit more complicated for the IRS to do. And at the business level, you deduct a few more things than at personal level that easily get so-called red flags.
So there are different things you can deduct in an entity that you maybe wouldn't or couldn't deduct in a personal income?
Yes.
Right.
And then for 2022 through 2026, California actually allows you to do what's called PTET, which is pass-through entity tax. And what that means is you only get...
Say that again. That sounds so sexy to me here. Pass-through entity tax?
Yes.
Okay.
Pass-through entity tax under AB 150. And you only can get that deduction if you have a separate entity. If you are just a sole prop, then you don't get it. So that's another reason why people should consider
So
creating...
say that again. You lost me on that one here. So somehow if you have an entity for the next 4 years going forward, you get to do something?
Yes. So since the law changed 2018, if you pay real estate tax, let's say $5,000, and then pay to California FTB on your personal income tax, let's say $50,000.
Right.
Doesn't matter how much you pay. You guys all know you guys only can deduct $10,000.
$10,000 with that salt tax cap I keep
Salt.
complaining about.
Yes,
Yes.
right.
But California say, well, if you pay me your business tax first, I'll give you the deduction at the Fed level. So in my example, let's say your real estate net gonna make $100,000 net.
Right.
If you don't do anything, you will be taxed at the Fed level at $100,000 income, and California at $100,000 income.
With no deduction.
Right. But now California say, hey, pay me 9.3%, and that's a real number, 9.3% of that 100,000 first. Give it to me. Then at the Fed level, you only get you have tax only 100 minus at 9.3, let's say 10. So 100 minus 10, you only get taxed on the $90,000 at the Fed level.
If you have an entity.
If you have an entity. If you don't, then you don't get to do that.
See,
So
that's what I'm
Every
looking
little
for.
bit adds up, man.
That's what I'm looking for here. Last question. When you sell all this stuff, does it matter? Is there a different tax rate or a benefit if you sold it as a corporation, LLC, partnership, or just personal?
At personal,
When you go to sell, does it matter if you have an entity? Are there different things that take place? And do the different entities have different advantages
That's a
when you
good
sell
question.
yeah. More likely, no. The only difference is going to be under LLCs. Currently, California has a gross receipts fee. Not currently, but it's been years already. Gross receipts fees. What that means is besides the $800, they're going to charge you based on your gross receipts. So let's say you sell this for $2 million. They say, well, then you're going to owe me another $2,500 something on that for gross receipts fee, in addition to all the taxes. But other than that, everything's pretty much equal.
Okay.
There's nothing else
Is
different.
it easier to sell something if it's in an entity? Does somebody want to buy that entity and just continue it? Or is it no different? Personally, let's say you own another property.
So in real estate, usually people don't buy your entity
Correct.
because it's come with the debt and the liability. Let's say someone is suing you right now, they don't want to buy that entity and
Oh, I
then
see.
inherit that.
The real estate is generally sold out of the entity.
Yes.
Yeah. So
Okay.
the entity sells it out of itself, and then usually does replace it with something else for tax purposes. But yeah,
Yes.
and the same with a trust. You know, if there's a family trust, and they can own the property in the name of the trust, and then they will sell it out of the trust, and you don't buy the trust, you just get the property. Yeah.
Yes.
Good
Okay.
questions, though.
All right.
See, I'm so used to having my real estate hat on, I forget that people don't always know, the nuance of what we do. This is why we have people like
And you don't think about how you set it up, what the implications are for the taxes going in or the taxes coming out. Does any of this ever affect, what's the thing you call where you flip it over into something that's, what's that magic number?
the 1031 exchange.
1031
Yes.
exchange. There you go. All
Yeah.
these numbers, I can't remember them all.
It's all tax codes. It's all tax codes. So I'm sorry. What was the
So
question?
isn't it any different if it's in an entity or a personal? The 1031 exchanges apply?
In terms of the tax exposure, or
Yeah.
no,
No.
It's just different ways to hold it for depending upon your investment strategy. And really, truly, with the LLCs, the primary objective is to protect your other assets.
Right.
And think about it. I mean, if someone is a tenant and they're living in a fourplex by the beach, they know that that's worth millions of dollars, and they suspect that their landlord has lots and lots of money.
Right.
And that is a slip and fall waiting to happen. So you need to be careful. And unfortunately, this is called the land of the lawsuit for a reason. Right?
Good stuff. All right.
I know. We're keeping it sexy. So I'm going to switch gears a little bit here. And before we wrap up, Thanh, I think we prepared you that I love asking my guests my sort of version of the famous Vanity Fair Proust questionnaire, just to get to know the person behind the business person. So you ready?
Yes.
Okay, great. What city do you call home?
Rancho Santa Margarita.
Nice. How long have you lived there?
This June actually gonna be 10 years.
Wow, it flies by, doesn't it?
It does. I can't believe it.
Well,
So fast.
If you've been there 10 years, you must love it.
Oh yes, I really love the city.
Tell us why.
It's very clean, very family oriented. My kids actually can run on the street
Wow.
to another neighbors, say hi, and come back, and I actually don't have to worry.
That's awesome.
Yes, and the HOA is super, super cheap, maybe $75 now a month, and we have access to all these parks and pools, so clean. I love
I
it.
love the Lago Club, the beach club.
Yes,
so
it's
fun.
fun.
Do your
Yes.
kids just live there in the summer?
Well, they try, but mom
Yeah.
say no. I
Mom's
can't
busy.
I can't handle it too much.
Yeah, it's a lot.
Yes.
I do not know how people like you are heroes. You're running a company, you're a mom, you're a partner to your spouse. I mean, you do charity work. Do you sleep?
I do sometimes.
little tiny increments once in a while.
If my kids doesn't wake me up to get some milk in the middle of the night, she still does it, unfortunately.
Wow. You're a good
Yes.
human, Thanh. You really are. All right. So I know this is a fun question and hard for some people. If you have one, what would you say is your most treasured possession?
I actually thought hard about this because I actually don't have a lot, but I do have one thing. It's a penny size green jade necklace pendant.
Wow.
It's actually my grandma's earring, one of the earrings.
Mm-hmm.
And when she passed away, I took that and make it like necklace pendant. I don't really wear jewelry, so but I keep it. I was like, if I don't steal this, I'm gonna choke them.
It's an heirloom. It's your grandma.
And every time I see it, I remember my grandma because she always wore it and raised me up. I always just remember those green jade earrings. So they now become my
That's
necklace.
lovely. And someday I'm sure you'll pass that down to your daughter.
Yes, they can do whatever with it, but that's mine for now.
See, they cherish the things we cherish. They're intimate, and everyone has their own. Now, considering the litany of things I was just sharing about you, you've done so much already. What would you say is your greatest achievement so far?
So the firm I created, I really wanted to change the public accounting industry a little bit, by a little bit, and hopefully everyone else going to compete with me and then going to change the industry because it's a very tough industry.
That's fantastic. And in what way do you think it needs to be changed?
So there are many ways, but right now I focus on really work-life balance, and there are 4 babies have been born since I started my firm, not by me, by my staff. That means we provide enough work-life balance that people are willing to get married and have kids. Versus before I work, most of my managers are either single or just single and dating, or just married but no kids because we can't. We're too busy.
And that is what I had heard. I didn't even think about that was just the culture of the industry.
Yeah, you gotta keep up with the work.
So you're creating a culture where people actually get to have lives.
Yes, so now I have 4 babies now.
That's wonderful. I love you even more now.
Thank you.
So, and this is my favorite. If you have one, what would you say is your personal motto?
So it depends on the day, depends on the time, but for today, I always tell my staff and everyone, including my kids, is be kind.
Yes.
You never know what people have been through, so just be kind, just in case.
Yes. And I can't imagine anybody ever calls a CPA and is grumpy. You never have to deal with cranky people, do you?
Oh my gosh.
Yeah, she might be saying be kind a lot today. Be kind, be kind, be kind.
Yes.
Oh
you
my
have to.
goodness. Well, I love it. I love everything about you. I love your story. I love how you're helping families grow their wealth. And I hear so many of our peers, our professional friends, who talk about how delighted all of their clients are with Thanh. So if someone needs to speak with you or just wants to have a quick call to understand, when they're going to be ready for you, how can they reach you?
They can just call the office, 949-484-8288. My assistant will direct you to me.
Great. And where is your office?
Right next to John Wayne
Oh,
Airport.
okay. So it's right in the middle of Orange County.
Yes. It's
Perfect.
very convenient located.
And that number, once again, operator standing by is
949-484-8288.
Perfect. And ladies and gentlemen, you're hearing from Thanh Cambaliza. She's co-owner of Cambaliza McGee. So that's it for today. We're going to call it a wrap. Please follow us on realveracity.com, our Podbean This Week with Wendy, or wherever you most like to listen to your podcasts.